Hello and welcome. Today is Sunday, the 27th day of November, 2016. Welcome to the Silver Charts channel. And before I get into the charts, this week I'll be looking at the Silver Eagle numbers on the US Mint website, as twice last week on Monday and Wednesday the numbers rose higher. This occurred the week after they announced the suspension of Silver Eagle sales for the rest of the year, a duration of over 6 weeks in time. No reasons was given. One might think because of renovations or because of supply. They can't get silver to actually make it. Maybe the demand, the people that they buy from say we don't want to buy anymore, so just don't make it. I didn't hear anything about that, but 2 times this week the numbers were higher, so I'll be really looking to see if they go higher again. And I've been thinking, is it possible that just maybe, this is something I think I would write in a book or a novel, that let's just bring this whole fake news story mainstream and let's put a story like this together, like the United States Mint is just going to stop making them, and this way companies, or sites I should state, like Silver Doctors and other alternate sites of the like, will be reporting it, and they all put out the same thing. And no, we never said that. That's fake news. I kind of wonder, not saying it is, but I'm just saying that in a novel, maybe that would be something of the like. On the daily chart, Friday session closing in at 60.5 US, 22.1 Canadian, 15 3/5 euros, and the gold to silver ratio closing at 71 3/5. It was 1 cent higher on Fibonacci on Friday, 2 cents higher on Wednesday, twice hit within that level. More often support is tested, the more likely it is that it'll be taken out. Also, more likely a lower high would come into play on further rallies. Meaning, if this were to sell back down to here, then maybe come back up, probably might only go to 1640, and then something like that might happen. That is an example. On a break below 16, 1595-ish in that area, I'd be now looking for 1614 to be both short-term, very short-term, and very mid-term level of resistance. It's obviously been in this bear market. Decent declining 18 average with the rate of descent on a decent level, and price action well below it states it's in a very bearish level at this time. It's at least got to get up to this band to even attempt to neutralize the market within this time frame. On the weekly chart, after hitting support within the key Fibonacci level the previous week, the next key point was this resistance level not hit this week. Price action did go below it, so now on any price moves going below here, we can see, yep, support for a bit, then it's resistance, and you're going to be testing within these lower levels. Within this time frame, which was keyword was a bull market, here's established support. Come back to the band and then break it. So it's in that of a bear market. It still could be looking to make another resistance test within the band and stay bearish. So that's why you just say, oh, it's bearish, so that's short. Well, maybe you might win, but maybe it's going to come up here and then go back down again. It's all maybe at this stage. Now, interestingly enough, I guess there's a head and shoulders pattern on this chart. At least I was told within a comment, and I'm guessing this is considered the left shoulder. Everything in here is the head, and this is the right shoulder. Problem with this is not on a straight line, although I do see a possibility for a head and shoulders pattern forming. As a head and shoulders pattern for me, I need to see a move up to anywhere. But the move has to come back to somewhere within the start. Well, it doesn't have to be the start of the move, but it has to come back somewhere like that. But it has to make a higher high after here. So there's a higher high. And this is a weak move to make a matching low after making a higher high, which is what it has to do to make the next step of the head and shoulders pattern. Because usually when you have a chart pattern where you go from a high to a low, and then you make a higher high and it starts going lower, you're going to presume that it's going to make a higher low, something like this. And then at this point, who knows if it'll make a higher high, but throwing that aside, within this here, this is pretty much what I need to see. Higher high, matching low. It can be a little higher, a little lower, or exactly at this point. And then this has to be, again, matching or close to matching on this level. And then, of course, it has to break the neckline of the levels hit in here. That's what I need for a head and shoulders pattern. So within this in here, you could say, well, maybe this is the left shoulder. This, of course, making the head. So if we end up breaking below this support, then we can complete the head pattern. And then let's just assume it goes down to 8 because it breaks down to the support. So now if the price action goes back up to 20-ish area and then breaks down below 8, at that point it would be completing a head and shoulders pattern. And the likelihood of that is probably not great, but if it does, you'd be taking the $50 top and the close to $8 low. So that's about 6 times or 6x. That's what I'd be dividing the move from 8. So I'd be looking at a play to about $1 and change, and probably to the $1.29 level, which is where silver started at well over 100 years when it was actually in the money. As far as in the money itself as your dimes and your $1 coins. With that being said, though, we can see, of course, it more clearly on the quarterly chart that if you do make that head and shoulders pattern, you got the left shoulder here. Then, of course, it would have to come down here. That would just be very much a deadly thing. But this is where I honestly think that this is fake news if I'm to report on something like that. Take care.